All right, let's dive right into this explainer. I want you to picture a scene that, let's be honest, is probably way too familiar to a lot of us. It's exactly 10 a.m. The morning bell has rung, the market has just kind of caught its breath from that initial opening chaos, and things are really starting to move fast. Right there in front of you, the chart for Bitcoin, or whichever asset you're obsessively tracking, is pulsing like a heartbeat. It's jumping up and down, just ticking away with real-time volatility. Your hand is hovering right over the mouse. Your index finger is resting so lightly on that left click. You've done the math, you've checked the trends, and you are completely, totally ready to enter the trade. But then, suddenly, the chart spikes upward, breaking through a key resistance level. Your heart starts beating just a little bit faster, right? There's this loud, super urgent voice screaming in your head, "Buy! Do it right now before you miss out." But literally in that exact same fraction of a second, there's another voice. It's quieter, but man, it is so much more paralyzing. It whispers, "But what if it drops? Wait, maybe it'll get better. Maybe it's just a fake out." Your palms are legitimately sweating at this point. Your chest feels tight. I mean, it feels incredibly visceral, doesn't it? It feels like you are right in the middle of this massive, high-stakes battle for your actual survival. But here is the really fascinating twist to all of this. You aren't actually at war with the market at all. The true battle, the one that is actually taking place in that tense 10 a.m. moment, is entirely internal. The real market, the one that ultimately dictates whether you win or lose in the long run over hundreds of trades, isn't out there glowing on your monitor. It's in here. It's inside your own mind. And until we actively conquer that really volatile inner landscape, the external one is always going to remain this unpredictable, punishing mystery. Section 1. The Hidden Battleground. So many incredibly smart traders spend years, honestly sometimes decades, just staring at charts, trying to decipher the absolute perfect geometrical patterns. They convince themselves they just need to understand the market better. Like if they just read one more book on technical analysis, it'll finally unlock consistent profitability. But the harsh reality of the source material we're exploring today is this. Understanding the chart is completely useless until you fundamentally understand yourself. The market simply doesn't care about your technical analysis. What it actually does is act like a highly polished mirror. It's a massive magnifying glass that reflects whatever is unresolved inside your mind, and it bounces it right back at you with literally 100 times the intensity. Let's break down exactly how this happens. If you bring fear into your trading day, whether you realize it or not, the market is going to systematically present you with the exact volatile situations that absolutely terrify you, shaking you out of perfectly good positions right before they actually turn profitable. If you harbor greed, the market will expertly dangle temptations right in front of your face exactly when you're most vulnerable, totally coaxing you into over-leveraging your account on a bad bet. And if you're feeling despair, frustration, or hopelessness, yeah, that is exactly when the market will strike its most devastating blows. It hits you precisely where your emotional defenses are the weakest. The market's true function isn't really to make you rich. It's to teach you exactly who you are, whether you want to know or not. Section 2. The Cost of Hesitation. To really validate this powerful metaphor, let's look at a pretty fascinating case study from our source material. We'll call this trader Arash. So Arash was this incredibly diligent student, and his technical analysis was absolutely flawless. I mean, he knew exactly how to read the data, draw the precise trend lines, and spot these perfect high-probability setups. He totally had the intellect for trading. But despite all that, Arash had this massive, crippling psychological block. Every single time it was time to actually execute a trade, he'd just freeze. He was plagued by this one paralyzing thought echoing in his mind. What if I make a mistake? And that intense fear of failure completely jammed up his decision-making process. Despite all his knowledge, he literally just couldn't click the mouse. Frustrated and totally exhausted, Arash finally brought this problem to his mentor. And his mentor delivered this incredibly profound piece of advice. He just looked at him and said, "Arash, the market doesn't fear mistakes, it fears hesitation." I mean, think deeply about that for a second. Being wrong, taking a calculated loss, that is just data. It's a completely natural, totally unavoidable part of the statistical process of trading. Nobody has a 100% win rate, right? But hesitation? Hesitation is completely destructive because it means you are totally out of sync with your own established strategy. You're trapped inside your own head, driven by emotion instead of logic. Just 3 weeks after really internalizing that advice, Arash came back with a massive breakthrough. He realized he hadn't actually been battling the live real-time market at all. Every time he sat down at his desk and his hand hovered over the mouse, he was actually just fighting the emotional ghosts of his past losses. He was basically fighting his own psychological memory. So ask yourself right now, when you sit down to trade, are you objectively looking at today's fresh data, or are you just shadowboxing with the painful memory of yesterday's bad trades? Section 3. Inner versus outer markets. To really understand why so many traders fail despite having all the right technical tools and the right intellect, we have to distinguish between two completely different parallel environments. First, you have the outer market. This is entirely mechanical. It's your Japanese candlesticks, your volume numbers, moving averages, the prices. It is objective, cold, hard reality. But then you have the inner market. This one is entirely invisible. It's made up of your raw emotions, your deep-seated beliefs about money and self-worth, and that emotional memory we just talked about. And here is the ultimate secret to this whole shebang. It's the inner market that actually governs your long-term success. Let me show you how this dynamic plays out in real everyday life. Imagine you take a loss on a trade. Maybe it's a really small, seemingly insignificant external loss, like say 50 bucks. In the grand trillion-dollar scheme of the outer market, $50 is absolutely nothing. It's a tiny, microscopic blip. In real life, it's roughly the cost of a profoundly mediocre dinner for two at some suburban chain restaurant. It really shouldn't ruin your day. But this brilliantly illustrates the supreme danger of the inner market. That tiny $50 loss gets absorbed internally, and suddenly it transforms into something monstrous. Behavioral psychologists call this loss aversion. Our human brains are literally hardwired to feel the psychological pain of a financial loss twice as intensely as the joy of a similar gain. The pain centers in your brain light up exactly as if you experienced actual physical pain. So that little $50 loss, it becomes a toxic, burning inner voice screaming, "You're an idiot. You are always wrong." That one small paper cut in the outer market becomes a massive, bleeding, infected psychological wound in the inner market, completely sabotaging your ability to look at a chart objectively the next day. And this leads right into the single most common and frankly most expensive trap that retail traders fall into. When they start bleeding internally from these psychological wounds, what do they instinctively do? They try to fix an internal problem externally. They go out and buy brand new strategies, super expensive monthly software subscriptions, and these overly complex, incredibly colorful technical indicators that make their screens look less like a financial chart and more like some electronic dance music laser show. But the bitter, undeniable truth is this. No new strategy, no matter how much you backtest it, and no fancy indicator is ever going to save an unprepared mind. If your inner market is in a state of absolute chaos, your outer tools are completely and entirely useless. Section 4. Lessons from losses. So how do we actually fix this? Well, we need a radical shift in our perspective on financial losses. There is this beautiful, deeply introspective story in the source material about a veteran trader who had just taken a massive, heavy financial hit. But instead of slamming his fists on his desk and revenge trading to try and win it back, he simply walked away. He went out and sat quietly by the sea, listening to nothing but the howling wind and the rhythmic crashing of the waves against the rocks. And in that deep silence, he asked himself a really piercing, incredibly uncomfortable question. Are you genuinely upset about the actual financial loss, or are you just upset about the agonizing wound to your ego and your pride? That quiet seaside epiphany changed absolutely everything for him. He realized that losses are not just red numbers on a digital screen meant to punish you. Every single lost trade is actually actively forging a necessary, vital part of your character. It is a profound psychological lesson, delivered without mercy, right in the brutal arena of market volatility. See, every single loss teaches you something highly specific, but only if you're actually willing to listen to it. One string of losses might teach you the vital importance of patience, learning the agonizing, incredibly difficult discipline of just sitting on your hands and waiting for the right setup to come to you. Another brutal loss, that might violently strip away your ego, teaching you the humility to finally admit when the market is right and your analysis is just dead wrong. Another teaches you the power of silence, of just watching the price action unfold without impulsively reacting to every single tick. And perhaps the most important virtue of all, learning profound self-compassion. Forgiving yourself for a foolish, undisciplined mistake so you can wipe the slate completely clean and trade with a clear, unburdened head the very next day. These virtues, you can't just read them in a textbook, they can only be forged in the hot fire of taking a real loss. So the crucial takeaway here is how we synthesize all of this information. The mechanical outer market, that's simply the arena of testing. It's just a daily exam to see what you are made of and how will you execute your plan. But the invisible inner market, that is your true arena of growth. True, lasting generational success only happens when you can successfully, patiently harmonize these two distinct arenas. Because if your inner world is chaotic and undisciplined, the outer world will relentlessly reflect that chaos right back into your bank account. I want to leave you with this final, incredibly powerful thought from today's explainer to ponder over. Before you learn to trade, you must learn not to trade yourself. Are you truly, completely psychologically ready before you click that mouse, or are you just blindly throwing your own unresolved emotions, fears, and hopes right into the market ecosystem? Take a hard, honest look in that inner mirror before you plan your next trade. Thank you so much for joining me on this explainer, The Psychology of Trading, and I will see you next time.